Global stocks extended their gains from last week after Wall Street ended Friday mostly higher as shares of SpaceX soared in a stellar market debut, while oil prices fell more than 6% on fresh hopes for a peace deal between Iran and the US. Stocks had reversed declines from earlier in the week and rallied sharply on Thursday. Analysts expect more of the same this week with a new deal framework now in place. On Friday, Brent crude fell to the lowest since March, crashing over 3% for the week. Brent settled below $87 per barrel, marking a 6% loss for the week. Gold's record rally faltered against late in the week as bulls run into higher interest rate bets in the US. In risk assets, cryptos ended the week higher, with Bitcoin ending above $64,000, marking a weekly gain of 5.5%. Still, the top token has erased over $1 trillion in market value since hitting a record high of more than $126,000 in October last year. Now, with major assets covered, let's shift focus to the Asia-Pacific stock markets. Regional equity benchmarks extended gains from last week after having closed broadly higher. Last week, Australia led gains up 2.1%. India's Sensex surged 1.7%. Japan's Nikkei added nearly 1%. Shanghai just about edged up to close slightly in the green. China's minimal move signals persistent domestic caution, while the rest of the region bets on easing trade tensions. In the Americas, SpaceX's landmark market debut injected fresh risk appetite across the region. Investors are buying growth, capital is moving, and the mood is bullish. The SpaceX IPO was a bigger boost for stocks on Friday than the prospect of an Iran deal. That is largely because Trump has repeatedly said that a deal with Iran was close since mid-March with no clear agreement yet. The S&P 500 ended last week with 0.6% gains. Nasdaq added 0.7%, but Canada's TSX surged 1.5% and Brazil's Bovespa jumped 1.3%, outpacing Wall Street. Looking across the Atlantic, UK's benchmark gained 1%. France's main stock index jumped 1.6%. South Africa's benchmark rose 1.3%, but Germany's stock index slipped 0.5%, suggesting that Eurozone's industrial engine is stalling. Berlin's economic drag signals deeper structural stress. Paris and London diverged from Frankfurt. Emerging market appetite remains firm, with the cracks in Europe widening.